Professor Allison Christians, thank you for joining us on Tax Notes Live.
Well, it's a tremendous pleasure. Thank you for having me.
I want to talk to you today about FATCA, especially things that we can do to lessen the hardships of FATCA. Let me be the first one to say that when it was enacted a few years ago, I was sort of on the bandwagon saying, this is a good idea, this is how we're going to catch people that are concealing income in tax havens. What went wrong?
Well, let me say I was on the bandwagon with you. And in fact, I think when I saw FATCA at first, I thought, well, it just got more expensive to try to hide from the IRS. I think it wasn't until I looked at it and thought about it and then met a lot of people who were on the harsh end of that law that I started to realize the extraordinary breadth of it. So FATCA in principle makes sense. You have to make sure that you don't have blatant tax cheating, blatant tax evading by people who are perfectly able to pay taxes in your country. But the problem of FATCA is that the U.S. system is based on citizenship-based tax, which means that FATCA is the first time that the U.S. could actually perfect this system, a system that had been on the books for 100 years, but was really sketchy in terms of how it was understood and how it was practiced. So what ends up happening with FATCA, and I think what's difficult, is that when you look at FATCA from the institutional perspective, it makes sense. When you look at it from the perspective of tax evasion, it makes sense. When you look at it from the perspective of individuals living in other countries, all of a sudden it doesn't make sense at all. It's a totally different law from their perspective.
Well, let's talk about Canada, where you live, where you teach. So many of the people that are being harshly treated under FATCA fall into this category of accidental citizens, or unknowingly they're a U.S. citizen. How does that play out? Because nobody thinks of Canada as a tax haven, but they're getting hammered.
Yeah, high tax country. So you have to think about Canada, you have to think back to a time when the border between Canada and the United States was much more porous. You could pass with a driver's license, you could go for a day. Sometimes the nearest hospital is in the United States. There are a number of towns that share a road between the U.S. and Canada. One side of the road is the U.S., the other side is Canada, and the hospital's on the U.S. side. So where are the babies given birth? They're on the U.S. side. And for lots of years, just a real integration of our two countries, and not much attention paid to citizenship-based tax. Most people just didn't even think about it, and they lived their whole lives without ever thinking about it. And only now is there a new scrutiny. Oh, wait a minute. Everybody who's a U.S. person is supposed to be compliant with U.S. law, and all that casual moving back and forth actually now has really formal consequences. So it just happens that we share this enormous border, and we share an integrated economy, and people have fluidly moved across that border without thinking about it, without realizing that stepping over, that having a birthplace in the U.S., that having children of Americans who live their whole lives in Canada, that it has all these formal consequences that no one ever really realized, never really thought about until now.
And even people who have no connection whatsoever to the United States might get caught up in FATCA because they have a spouse who's caught by FATCA and their money is in a joint bank account.
Yeah, so I think there's sort of two constituencies that I worry a lot about. I think mostly because these constituencies can't really speak for themselves. Like, a lot of people who are in this mess can handle their own problem and they can speak for themselves. But there's two that really, I think, get overlooked. One is the constituency of people who are married to non-U.S. persons who learn that they are obliged to be tax compliant, and they drag along their families with them into this trauma. Their families are not American, but they get pulled into the system by virtue of having an American in the family. And what that has done is made those people vulnerable, because if you are sharing a joint account with a non-U.S. person, that person has no reason to want to share their information with the IRS. And so you have a discussion about, well, separating assets, which leaves the American exposed and vulnerable in a foreign country. I'm not sure what policy goal that meets. And the second constituency that I worry about are people who didn't realize that they were U.S. persons, or people who are working with people in businesses, entrepreneurs, who one of them finds out they're a U.S. person, because a U.S. signature, if you're a U.S. person with signature authority over an account, the whole business has to go to the U.S. too. So now, if you have a lawyer in Canada and you have a trust fund with that lawyer, an escrow account on a deal, and you're not American, you don't have anything to do with the United States, but that person is a U.S. person, now your information goes as well. Or if you own a business together and you've been sharing an account together, well, now the whole business goes to the United States. And then you can put those two together. Let's say you have a condo in Canada. You own one part of a condo and the rest of the people in that condo are Canadians and you're a U.S. person. The whole condo documents, the accounts of the shared space in the condo, that belongs to the IRS now. And you've got a bunch of Canadians saying, why are my condo fees the business of the IRS?
Well, what could be done to fix this? There was something you've been writing about called the same country exception. How would that work to mitigate the harshness of FATCA?
So I suggest the same country exemption as a quick fix and a familiar fix, because we have same country exception in the controlled foreign corporation regime, in the subpart F regime, so it's a known word or a concept. Oh, if you have money and you're doing things in the same country where you are operating, well, that's probably okay.
It's a known concept.
Known concept. So same country exception says, look, if you have a neighborhood bank account where you live, and that's in your own name in the place where you live, you're probably not a tax evader. Let's just exempt those from FATCA reporting. This gets the financial institution, gives them a way to have U.S. persons in their bank account, in their banking system, without all of the complexity and all of the compliance, where all that complexity and compliance really does not ever result in tax revenue. It's just paperwork. So the same country exemption is just one option. It says, for Canadians living in Canada who have U.S. person status, if your bank account is also in Canada, you're probably not a tax evader. We don't have to worry about you. Let's get you out of the system. Now, some people will say, but that doesn't help the person who lives in a country where they might be subject to expropriation. So if you are working, living in a country where it's not safe to put your money in a local bank account, and so therefore you have a bank account in a third country, and that's a perfectly legitimate reason to have that account, and then that person would not be exempt from the regime, so therefore the same country exception doesn't go far enough. You know, I don't disagree with that. No solution goes far enough except the repeal of citizenship-based taxation. That's the right answer. But I think we have to understand that we can take incremental steps. And once you take one incremental step, you move the window of opportunity. You say, okay, that worked. We didn't lose people. We didn't have a spate of tax evasion. We didn't fall apart. So what's the next thing we can do? And over time, eventually, incrementally make the thing workable.
Now, the United States clings to this policy of citizenship-based taxation.
Right.
But am I correct in thinking we're one of the only countries in the world that actually has that policy? What's the rest of the world do?
So the United States is the only country in the world that treats individuals as if resident based on their legal status. So other countries have taxes on non-residents who are citizens. There are a few that have them, and there's a few countries that have what we might call clinging residents, where you were a resident, you've moved away, you've moved to certain countries for a while, we're still going to treat you as a resident. The Eritrea is always, the people like to say, well, Eritrea and the United States. But Eritrea's tax is actually pretty benign compared to the U.S. It's just a 2% excise tax on all Eritrean citizens around the world. Unfortunately, the U.S. has condemned Eritrea for this extraterritorial taxation and said they can't do it. Every country in the world exercises residence-based taxation. If they have an income tax, they tax all the residents. Many countries tax all the residents on all of their income from all sources. And every country in the world taxes on the basis of source. They tax anybody that gets income from their country. The U.S. does everything all the other countries do, but then the U.S. does just a little bit more, just grabs a little bit more. It says, not only do we want all the people that live in the U.S., whether they're citizens or not, And not only do we want to make sure we get tax on all income from US sources, like every other country, but we also want to reach into Canada and get Canadian residents who happen to have US status. Now, the US is the world's biggest economic power. If the US cannot raise enough revenue from its own residents, which includes all US citizens living in the United States and all non-US citizens living in the United States, that's what all other countries fund their systems on, all their residents and source. If the US is the biggest country in the world and they can't be satisfied with what they can get from all of their residents and all of their source, what's the problem? I don't think that you get that much more going extraterritorially that actually belongs to you. I think actually what happens when the US reaches out with citizenship-based tax is it preempts the right of the other country to tax its residents. It says, notwithstanding that's your resident, I'm going to tax that person too. And in fact, moreover, I'm going to tax them first. I'm going to tax them now, and then when you get around to taxing them later, it's going to be too late and I'm not giving a foreign tax credit. This is not neighborly, and it's not necessary. And so that's what makes the US system, in my view, exceptional.
Okay, now I'm scratching my head thinking for some sort of an escape path from FATCA, but short of a same country exception, which would help some cases but not all,
Right.
or really abandoning citizenship-based taxation. It almost sounds like renunciation of U.S. citizenship is the path out. But that's not so easy, is it? They've made that more burdensome.
Right, so renouncing your citizenship or relinquishing your citizenship has always been a right. In U.S. law, you have always had that right, and it was always free. It was free right until 2010, the year the U.S. passed FATCA. And that year, the fee went from $0 to $400. And then last year, the fee went from $400 to $2,350. So now, if you want to leave U.S. citizenship, you have to pay. Now, the State Department has said, well, it shouldn't have been free because it's expensive for us to let you leave. Look at all these procedures we have. So you have to pay for that because we have all these procedures that you have to do to leave, and so you've got to pay because it costs us money. So you can see from the outside that looks a little absurd. Right? You put all these obstacles in my way. You tell me I have to do all these things and come to the embassy and make my case and fill out forms, and then you charge me because you made all those procedures. It cost nothing before, it costs something now. You're obviously putting up a wall to stop me from leaving. You know, the renunciation, though, so I think, first of all, you have a right to leave your nationality. That is a human right which is internationally recognized. It is also recognized in U.S. law, so I don't think that renunciation fee could survive litigation. I think it's just a matter of time. People need to realize I have a right to leave, and they need to litigate. I think that will happen, and it should happen. It's wrong to impose a fee to leave. But second, it's also just a nuclear option. Why should we have a tax system which incentivizes people to leave their citizenship? No other country in the world tries to get people to leave their citizenship. Why is that a policy? I don't think it is a policy. I think it's an error. I think it's a mistake. It's oh, we've always done that, and we're still doing that, and now it has all of these pernicious effects, and the reaction, I think, is natural. And this is just my view from the outside, we're doing this thing that we're doing which is wrong, and now people are leaving. Well, don't let the door kick you on the way out. It's a very defiant response that Americans have to people leaving their U.S. citizenship. They say, yeah, see ya, bye-bye. That's the wrong response, really. If you understood the equities, you would not give that response. But it's a knee-jerk reaction. It says, American citizenship is so valuable, nobody should be willing to give it up. But people are willing to give it up if you make it so impossible for them to stay U.S. citizens. And I think that's what's happening. So for me, making it easier for people to leave is the last ditch. It's the worst policy. Why can't we just make it easier for them to stay? If there's some reason we want people to leave who live in other countries with U.S. status, if there's some reason we don't want them to be Americans, I'd like to know what that reason is. I don't think Congress has given us that reason.
No one's enunciated such a reason.
No, I don't think so. And it used to be, we used to think Americans abroad are ambassadors for the United States. They go out and they are diplomats. who spread American values. And this is a good force in the world. If we've had a change in view on how Americans, people who live in other countries with U.S. status, how they represent this country, I have yet to hear it. It wasn't in the Hire Bill, the Hire Act of 2010. Mm-hmm. It hasn't been discussed, and I don't think we would. If you looked at it, I think if people sat down and talked about it, this is not what we would agree to do. That is, if we all sat down and said, let's decide if we want Americans to live in other countries. Yes? No. I think we would all say, yes, Americans should have the best, the highest level of liberty in the world. Americans should be able to live wherever they want. But FATCA says they may not live wherever they want. Not if they want to save for their retirements. Not if they want to put their children through college. Not if they want to have a normal financial life. No, they may not live outside of the United States. It's just too complicated. That's not the world I think any of us wants to live in.
In terms of renouncing one's citizenship, they also have to regularize their tax status.
Right.
So it is often going to be more than just paying the $2,000+ you mentioned in terms of a fee. They actually have to sort of let themselves be hurt by FATCA and then renunciate. Is that your understanding?
It depends on the person. It's very individualized. But if you look at somebody who doesn't have a Social Security number, for example, you get the letter from your bank that says, your foreign bank says, you have to give us your Social Security number or we're going to close your account. Well, you don't have one. Americans don't know this, but getting a Social Security number when you don't already have one is not something you do in 30 days. It can take a year. So there's a year where you can't be compliant. It's not possible. You cannot fill out a tax form. You cannot give anything to your bank. You can't do anything. How can you fill out a withholding certificate without a U.S. Social Security number? You can't put all zeros. Maybe you can. Maybe you should.
No, it's considered a frivolous return if you just put down all zeros.
Exactly.
Yeah.
So you're stuck between a rock and a hard place right away. The only way to get compliant is to first wait for that Social Security number. So already you're offsides. You're offsides. So to get out, you have to go in, get the Social Security number, then file all of these back returns. Now, even if you don't owe anything, let's say you file and you're just one of these people that just doesn't have any tax owing. That 80-something%, almost 90% of people are in that situation where they never owe any tax. You've done all this compliance, you paid an accountant to help you, you've had sleepless nights for a year at least, and now you get the fee to leave. Why did we do that to you? I don't know why we've done that to you. I mean, there must be some reason that we feel the need to do this to people. I think the reason is a misguided, it's sort of a frat mentality. Well, we hazed all the other guys, and I was hazed, so therefore we've got to keep hazing. We can never stop. We have to keep everybody on side because we can't let people get away with whatever it is we are afraid they're getting away with. And my position is, that's fine. You can have that mentality. You can look at the whole world and decide all these people are tax evaders and cheats, and you should have known better, and you should have been on side your whole life, and you weren't, and you have to pay. Get on side before we'll let you leave. You can have that mentality about the world. Or you can say, you know what? The U.S. slept on citizenship-based tax for 100 years. 100 years did virtually nothing to bring this population in, and now is dragging them in with a huge dragnet. There's a lot of people who have a lot of reason to be surprised at this, and we should just give them the benefit of the doubt.
Now, speaking of justification, I don't remember any debate on the floor of the House or the floor of the Senate in 2010 when the Hire Act was passed. This was a pay-for,
It was a
right?
revenue raiser.
There was a revenue raiser.
Right.
It was a Jobs Act. We had the financial crisis and the sort of jobless recovery.
Yeah.
The government wanted to do something to train or re-educate the workforce.
Yeah.
There was a price tag associated to it. They wanted it to be revenue neutral,
Right.
and this was a pay-for. So
Right.
none of these issues that you've discussed here in the last few minutes were actually debated by the United States Congress.
No, not at all. I don't think they were thinking about U.S. persons overseas. I don't think that's who they had in their minds at all. I think they forgot. That speaks to the quality of the law too. That the U.S. Congress, who's responsible for the tax code, doesn't know what's in the tax code. That's not good for lawmaking. Usually, it's not good for policy. Let's remember that the projected cost of FATCA to the United States was zero. The projected cost was zero because, of course, all the costs are on foreign financial institutions and now on foreign governments with the intergovernmental agreements, and of course on the individuals themselves. So anytime you can come up with a system where you might have a chance of finding some more revenue at no cost, that's a revenue raiser. So it's popular even if it's wrong. So, and it's popular because of the scourge of tax evasion, I think, again, going back to UBS. So, you know, Congress didn't discuss it because Congress didn't think of it. Congress thought that they knew what they were legislating in some fashion, or whoever read it thought that they knew what they were legislating. And it turns out, actually, if you go back in history, versions of FATCA had been proposed. Since 2009, the Stop Tax Haven Abuse Act in a couple of different iterations, another act called FATCA never got out of committee. So this is one of those moments where you have that legislation, it's been drafted by somebody, at the last minute somebody says, can we shove that in here and get another 10 billion in the budget somehow, and can you just rewrite that and stick it in there? It seems like that's what happened. You know, so from my perspective, it's a failure of governance. It's a failure to think it through. You know, there's a lot of reasons why bad policies get adopted, and they're usually for good reasons. I have no doubt that when Congress passed FATCA, they had good intentions and thought that they were bringing fairness to a system, that they were building integrity into the U.S. system. And in some respects, no doubt, that's exactly what FATCA should deliver, should it ever be implemented. Don't forget, it actually hasn't been implemented yet, in most respects, or in fundamental respects. So if it gets going and the whole world gets involved in this, could there be more integrity in the U.S. system? Certainly. I think that people will think twice before they put their money in a numbered bank account again. And banks will think twice before they try to sell that to people in the United States. You know, it's just that the collateral damage is becoming the feature story. You have millions and millions of people who just were not considered, and now their problems are bigger than I think anyone can handle.
Professor Allison Christians, thank you for joining us on Tax Notes Live.